This chart compares the current ratio and quick ratio of all 5 companies in 2024. Both ratios are liquidity ratios which measure a company's ability to pay its short-term obligations. From the graph, we can clearly see that Bonia recorded the highest current ratio and quick ratio, showing that it had the strongest liquidity position among all the companies. CIB Chakra also performed well with both ratios above 1, indicating that it had sufficient current assets to cover its short-term liabilities. Magma showed moderate liquidity, while 99 Speedmart recorded lower ratios. However, this is quite common in the retail industry because inventory is sold quickly and converted into cash. DRB Hagel recorded the lowest liquidity ratio, suggesting that it faced greater challenges in meeting its short-term financial commitments. Overall, Bonia demonstrated the strongest liquidity position while DRB Hagel showed the weakest. Next is the current ratio analysis. The current ratio measures a company's ability to pay its current liabilities using its current assets. Generally, a ratio above 1 indicates that the company has enough current assets to meet its short-term obligations. As shown in the graph, Bonia achieved the highest current ratio of 3.87, reflecting excellent liquidity and strong financial stability. Magma and CIP Chakran also maintained healthy current ratios, showing that they were financially capable of meeting their short-term commitments. 99 Speedmart recorded a current ratio of 1.18. Although it is lower than the others, it remained acceptable because retail businesses usually sell inventory quickly and generate cash on a regular basis. On the other hand, DRB Hicom recorded the lowest current ratio of 0.40, indicating weaker short-term liquidity compared to the other companies. Overall, the current ratio suggests that Bonia had the strongest ability to manage its short-term obligation in 2020. And now look at the quick ratio analysis. Unlike the current ratio, the quick ratio includes inventory and focus on the company's most liquid assets. This gives a better picture of how quickly a company can settle its short-term liabilities without relying on inventory sales. From the graph, Bonia again recorded the highest quick ratio of 2.66, indicating a very strong liquidity position. CIB Chakran ranked second with a quick ratio of 1.22, showing that it also had sufficient liquid assets to cover its current liabilities. Magma and 99 Speedmart recorded lower quick ratios, meaning they rely more on inventory to meet their short-term obligations. DRB Hagel had the slowest quick ratio of 0.35, suggesting that it had the weakest immediate liquidity among the 5 companies. Overall, Bonia remained the strongest performer while DRB Hagel showed the highest liquidity risk. Last but not least, our comparative analysis showed that the financial position of the 5 companies varies significantly. Bonia demonstrated the strongest liquidity performance with the highest current and quick ratio, indicating excellent financial stability. CIB Chakran also maintained a healthy liquidity position and showed strong financial management. Magma achieved satisfactory performance while 99 Speedmart maintained stable liquidity despite operating in the retail industry where lower liquidity ratios are common. Finally, DRB Hagel recorded the weakest liquidity performance, suggesting that it may need to improve its short-term financial position. Overall, liquidity ratios are useful in evaluating a company's financial health because they show how effectively a company can meet its short-term obligations. Thank you.
Hi everyone, my name is Ellie and I'm from Group 3, and now I would like to talk about the asset management analysis of 2024. And the companies that we are selected today is the 99 Speedmart, Bonia, Magma, Chakran and DRB Hicom Berhad. So 99 Speedmart is a convenience store chain that we are seeing a lot in Malaysia and well known on focusing on fast-moving consumer goods and high sales volume in affection for their inventory management. And also for Bonia, it is a luxury fashion and leather good retailer that sells purse, handbags and wallets. And also Magma Group Berhad, which is a hospitality and property investment company that are only focused on hotels and development. Chakran is a integrated poultry producer which produce only in focusing of chicken, ducks and fish, and also DRB Highcom Berhad, diversified conglomerate, business include automotive and banking and property for the land. Thank you. So, we conclude the comparative asset management overall performance in a table. So, this is what we have been conclude, which is in the first place, it's 99 Speedmart. The performance was best overall, especially in the asset management. And for the Chakran is number 2. It's good, but not as the 99 Speedmart. Also for Monia is Bonia. It is a moderate in the asset management things, and also the Harbi Highcom is moderate low because it didn't have a lot of contribution on the asset management, and Magma is the weakest as we look into the asset management in their report. So now we can look into the key findings. So first of all, we can see the 99 Speedmart, which is the highest receivable turnovers and also the highest asset turnovers, as for the fastest collection in just 3 days, and also excellent working capital management. As for the CAB Chakran, it is the best inventory turnover and also a fast movement of the perishable product. And Bonia, it is a moderate efficiency because of the luxury products that need quite a lot of time to sell. And for the DRB Highcom is lower asset turnover due to the automotive and the banking business, and it take a lot of long collection period, which is 93 days. And for the Magma Group, it is very weakest performance because of the slow inventory movement and also the collection product that takes 350 days and the underutilized asset. So in this chart, we can see the bar that are highest to the lowest. So as for the Chakran, they have the best inventory turnover, so it on the number 1. As for the 99 Speedmart, it is number 2 because the highest receivable turnovers. As for the DRB Highcom, they still can manage to get a lower asset turnover. As for the Bonia, the selling period was high, so it couldn't meet it, and Magma is the weakest performance here. For the conclusion, as we conclude in our report, the 99 Speedmart is the strongest performer in the asset management because it did convert inventory into sales quickly and also collect the customer payment almost immediately. That's why they have the beneficiary and uses it as assets more efficient than the other company. So they can buy the asset and gain the beneficiary almost every time. So that's why the asset management in India Speedmart is very strongest among the other companies that we selected on their report today. Thank you.
Hi guys, this is Anisha. Now let me introduce 99 Speedmart Retail Holdings Berhad. Rather than viewing it as a standard grocery chain, think of 99 Speedmart as a high-velocity cash engine. Their strategy centers on convenience, essentials on staples, and rapid inventory turnover. Because customers pay immediately at checkout, cash collection takes under 3.5 days on average. This virtually eliminates credit risk and provide constant liquidity, allowing the company to expand aggressively without relying heavily on bank loans. Alright guys, now moving on to debt management. When analyzing capital structure using the total debit ratio, 99 Speedmart stands out with a balanced 43.61%. This means creditors fund less than half of their asset base. Now, while a luxury retailer like Bonia keeps an even lower debt ratio of 32.36% to guard against market downturns, 99 Speedmart's 43.61% is a sweet spot for retail. It maintains a healthy equity cushion while efficiently using leverage to boost returns. By contrast, industry peers like DRB Highcom and Magma carry heavy debt burdens ranging from 60% to over 83%. Alright guys, now let's look at times interest earned, TIE, which measures how easily a firm can cover interest expenses using operating profit. This is where 99 Speedmart truly dominates. With interest earned of 15.64 times in 2024, climbing to 17.99 times in 2025, Operating profits cover interest cost nearly 18 times over. Compare this to competitors like DRB Highcom or CAB Chakaran. Those profits cover interest just 1.48 times. 99 Speedmart carries virtually zero default risk because its rapid cash cycle turns sales directly into debt servicing capacity. And to wrap up, debt isn't dangerous when your business model turns over inventory monthly and collect cash immediately. 99 Speedmarts balance prudent borrowing with unmatched operational velocity. This control leverage acts as a force multiplier, enabling them to deliver a stellar at 33.47% return on equity while maintaining an ultra-safe solvency profile that far surpasses its rival.
Hello everyone, now you're moving to Magma Group Berhad. Magma Group Berhad represents the evolution of a legacy that began with Impiana Hotels Berhad. Today, the group is positioned as a diversified investment holding platform, ensured in hospitality and expanding into adjacent sector aligned with evolving lifestyle and urban development trends. The group manages and operates hotel properties including Wolo Kuala Lumpur, Impiana KLCC Hotel, Impiana Hotel Ipoh, and Impiana Hotel Senai. Magma Group believes that sustainable value creation is grounded in clarity of strategy, discipline in execution, and strength of partnerships. The group adopts a partnership led approach, working alongside operators, investors, and collaborators to combine complementary capabilities and scale effectively. Growth is pursued selectively with a focus on opportunities where the group can contribute operation insights and create differentiated outcomes. At the same time, the group maintains a disciplined approach to capital deployment and portfolio management. About their strength, one have extensive hospitality experience. Magma has more than 30 years of experience in the hotel and resort industry. This gives the group established operational knowledge, industry relationships, and experience in managing hospitality assets. 2. Recognized hotel brands and strategy locations. The group operates established brands such as Wolo and Impiana, with hotels located in Kuala Lumpur, Ipoh, and Sinai. Properties such as Wolo Kuala Lumpur and Impiana KLCC benefit from recognizable branding and attractive urban locations. Third, diversified business activities. Magma is no longer dependent on hotels. It has expanded into property development and lifestyle retail, including its joint venture with the Shagi Malaysia. This diversification could create additional resources of income and reduce dependence on a single industry. Fourth, experienced leadership. The group's senior leadership has substantial experience in hospitality, property development, and marketing. For example, its group executive chairman has more than 30 years of relevant industry experience and was involved in developing the Wolo Kuala Lumpur concept. Finally, improved financial flexibility. Magma completed a 379.2 million ringgit capital reduction exercise in 2025 to offset accumulated losses and reorganize its capital structure. Although this did not generate new cash, it provided the company with a cleaner accounting position and greater flexibility for future corporate activities. This is a quick financial performance of Magma Group Berhad. Magma Group Berhad's financial performance is weak during 2024 and 2025. Even the group shows improvements in current ratio, receivables turnover, collection period and total debt ratio did not translate into strong profitability. The company do not have sufficient high liquid assets to cover its short-term liabilities without relying on inventory, assets, sales, or additional financing, and the group continued to report losses and negative net profit margin, returns in assets, and return on equity in both years. And now this is a quick financial performance overall of Magma Group Berhad. Magma Group Berhad's financial performance is weak during 2024 and 2025. Even the group shows improvements in current ratio, receivables turnover, collection period, and the total debt ratio did not translate into strong profitability. The company do not have sufficient high liquid asset to cover its short-term liabilities without relying on inventory, asset sales, or additional financing. And the group continued to report losses and negative net profit margin, returns in assets, and returns on equity in both years. Hello again. For industry comparative analysis, we will compare the profitability of the companies using net profit margin, return on assets, and return on equity. For net profit margin, Bonia Corporation Berhad shows the highest net profit margin of 18.17%, which means it generated approximately 0.0817 of net profit from every 1 Malaysian ringgit of revenue. That's why this company was the most effective in converting its sales into net profit. 99 Speed Mart recorded the second highest net profit of 4.87%, although its margin is lowest than Bonia, but still remain profitability better than all other companies. Kapkar Kakaran recorded a net profit margin of 4.06%. Its performance was slightly below that of 99 Speed Mart, but still positive, and the company have the ability to control its overall expenses and produce reasonable profits from its sales. And the RB Hicom recorded very low net profit margin of 0.65%. This can show that its revenue was absorbed by cost taxations and other expenses. And for Magma Groups, it is recording a negative net profit of 305%. This means that the company suffered a very large net loss relative to its revenue. For return on assets, 99 Speed Mart recorded the highest return on assets of 18.87%. This means that the company used its asset base more efficiently than the other companies. Kapkakaran achieved the second highest ROA of 6.02%. The company demonstrates reasonable asset utilization. Bonia, even it was effective in profit margin, it generated a lower level of profit relative to the total assets employed in the business. The RBHcom recorded only 0.18%. Its large asset base introduced a very small return, indicating weak asset profitability. And finally, Magma Group recorded a negative ROA of 18.49%. This means the company lost approximately 0.01849 for each 1 Malaysian ringgit invested in assets. This shows an inability to generate sufficient earnings from its asset base. For return on equity, 99 Speed Mart again recorded the highest return on equity of 33.47%. This indicates that the company provided the strongest return to its shareholders among the 5 companies. Kapkakaran recorded the second highest ROE of 11.65%. This indicates a reasonable return for shareholders and supports the company profitability performance. Bonia recorded 7.17 of ROE. This shows the company generated good margin profit from its revenue but produced a more moderate return relative to the amount of shareholders' equity invested in the company. The RBC-Com recorded only 1.01%, which is a very small return for shareholders. The company remained profitable, but the return generated from its equity was weak. Magma Group recorded negative ROE of 47.15%. This means the company's operations reduced shareholders' value during 2024 rather than making positive return. This shows a weak financial position from the shareholders' perspectives. In conclusion, the best performance among the 5 companies goes to Bonia Corporation Berhad in net profit margin, and for return on assets and return on equity, it goes to 99 Speedmart Retail Holding Berhad.
This slide provides an overview of Bonia Corporation Berhad's performance, growth, and financial health. Bonia is one of Malaysia's leading luxury fashion brands, well known for its premium handbags, footwear, accessories, and lifestyle products. Between 2024 and 25, the company recorded an increase in both revenue and profit after tax, showing that it continued to grow despite operating in a competitive retail market. In terms of financial health, Bonia maintained a strong liquidity position with a high current ratio and quick ratio, indicating that it can comfortably meet its short-term financial obligations. The company also has a low debt to equity ratio, reflecting prudent financial management and lower financial risk. Overall, Bonia can be compared to a well-crafted luxury handbag built with quality, financial stable, and trusted by customers. Although its growth is steady rather than rapid, the company has a solid foundation for sustainable long-term performance and value creation. Based on our comparative financial analysis, our group recommends 99 Speedmart Retail Holdings Berhad as the best investment among the 5 companies. While Bonia demonstrated strong liquidity and Cap Cakaran showed excellent inventory management, 99 Speedmart consistently performed well across the key financial ratios. One of its biggest strengths is operational efficiency. It recorded the highest total assets turnover of 3.88 times, meaning it generated almost 3.88 in sales for every RM1 invested in assets. It also achieved the highest receivable turnover and the shortest average collection period, showing that it collects cash quickly and manages its operations very efficiently. These strengths provide the company with a strong cash flow and a competitive advantage. Another reason we recommend 99 Speedmart is its strong profitability and financial stability. In 2024, it recorded the highest return on assets of 18.8% and the highest return on equity of 33.47%, showing that the company uses both its assets and shareholders' investment very efficiently to generate profits. In addition, its times interest earned ratio of 15.64 times indicates that the company can comfortably meet its interest obligations, reflecting a very stable financial position. Overall, 99 Speedmart consistently outperformed the other 4 companies in operational efficiency, profitability, and financial strength, making it the most attractive long-term investment choice.